download number 98, Andrew and Michael again. What?
Yeah.
I mean, I know, and thank you very much for all of your feedback. You know, we are your two favourite advisors, I get that. But seriously, Dan's gone missing in action. Brendan. Claire nearly even got a run this morning.
Yeah, she did. Yeah.
Anyway, well, she picked Brexit.
She did.
She's got a better track record than you and I. Anyway, a bit of a shorter one today, bit going on. We've also got the Turia pit lunch, so hence my very masculine pink shirt on. So we'll make this a short, sharp lunch and presentation today. So, Michael, share market just keeps on keeping on. We touched on it last week. What's going on? Why does it keep going up? There's plenty of reason for it not to.
Yeah, that's right, Andrew. I mean, look, US markets hitting, again, all-time record highs. You know, the thought of Brexit and, you know, a couple of the goings-on around the world seem to have, now distant memories. You know, our market, of course, having a good couple of weeks post-election. I think, Andrew, ultimately comes back to the old S word, stimulus. The fact that central banks around the world are just saying, look, they're going to do pretty much whatever they can to keep the big wheels turning.
Print that money. Keep
Absolutely.
that money printing going.
Yeah, and I think that's it. I think ultimately investors now are pretty confident that the fact that, you know, if things start to go a bit pear-shaped, central banks are just going to keep throwing dollars, yen, pesos, whatever the case might be,
pounds,
into it, and and of course, you know, literally, you know, to be the last 6 or 7 years now, governments have been stimulating economies, and as soon as there's a whisper of you know, more to come, markets tend to rally up for a bit. So, and I think that's really, you know, where it's coming from. The state of the world still is in a little bit of flux at the moment, but you know, again, central banks looking like doing whatever they can to keep things rolling along.
And I think there's a bit of FOMO going on there as well. So FOMO, the fear of missing out, not only with US markets, because we've got to remember interest rates in the US are what, 0.25 of 1%? So in other words, or is it half? It might be half now.
Well, I think they have a range, don't they? But it went from 0.25 up to half.
Yeah. So basically, you know, interest rates are incredibly low, and we lament low interest rates here. It is forcing people to buy risk assets. It's forcing them to buy property. We'll talk about that in a second. Forcing them to buy shares. So as a consequence, you can see why things are running up. And every time there's a whisper that Reserve Bank's going to have these printing presses going, it just keeps kicking share markets along. So my comment around property, there's actually a float coming up soon. Do you want to talk a little bit about that one?
Yeah, Property Link. Yeah, I must admit I haven't read too much about it.
That's all right. Well, I'll talk a little bit about it, and you can just nod and smile and kick me when I say the wrong things. So basically, it's around a $500 to $700 million fund. We haven't got sort of final pricing. It's going to have a mix of industrial and commercial properties, paying somewhere around 6.5–7% unfranked. A lot of interest in that sort of REIT space at the moment, that listed property space. Most of them are trading at 1.4 times net tangible assets, which is quite high historically, but again, in a low interest rate environment, and people are saying, well, I put 2% and get money in the bank at 2%, or I can buy a property trust and get 7.4%. And we saw last week the interest in Viva, that 400 plus service station float being managed by NAB from memory, that opened and closed in a day. And there's another one that's speculated in the press. So I see Charter Hall Whale is also getting a bit of traction as well. So plenty of interest in those. So Property Link, if you're interested in that, come and have a chat to us. We're also doing a placement for a company, AUF, which is a Asian Opportunities Fund focusing on India and China. Some really interesting statistics coming out of consumption growth or consumers in both India and China, and that multiplier effect. So in other words, they have a given level of fixed cost they need to cover, electricity, you know, gas, whatever, and then as their income increases, their consumption increases exponentially. And this manager basically focuses on companies in India and China and the rest of Asia, but those two areas in particular, about 60%, and basically trying to pick those companies that would benefit from the increased consumption. And, you know, we talk about the China consumption story increasing. Over the next 15 years, there's going to be 200 million new middle-class Chinese consumers. So basically the entire US population becoming middle-class Chinese consumers. So you can see why, even though the Chinese economy is slowing, there's still a lot of interest in that space. So AUF, if you're interested in some of those.
And the India story too, Andrew, is just going along unbelievably. You know, they've got GDP growth of still around 8%. Their interest rates, unlike the rest of the world, up around the 7.5% mark. So, you know, that economy is really booming along.
And it's interesting you mentioned India because Modi, I think is the guy's name, my apologies, Indian Prime Minister, he's had a number of reforms that he's pushing through their economy, which is opening up their economy, increasing the middle class. And if we think 200 million from China is impressive, India is the most populous country in the world with around 1.3, 1.4 billion. I mean, you've got 400 million people that don't even have reliable electricity. Imagine if half of them sort of start getting stable electricity and all the flow-on effects. So certainly this AUF does look really interesting. So that's sort of the capital raising side. So we've covered off on share markets where they are at the moment. The other thing I think we were going to talk about was profit reporting season. Any sort of immediate thoughts there?
Well, Andrew, again, I think, well, if today's anything to go by, we've just seen CIMIC, the old Leighton holding, getting a good old
smack.
Yeah, good old thumping. Their first half profit coming in below expectations. BHP, funnily enough, as well, coming out with a production. Well, I guess production result, but the figures weren't what the market expected. So yeah, you know, I think ultimately there's going to be a few left fielders out there, no doubt about it, as there always is. But yeah, hard to see, you know, this momentum continuing, Andrew, in my humble opinion. You know, again, I think a bit of euphoria after the Brexit and elections and a few other bits and pieces, but I think the reporting season is going to bring us down to earth somewhat. So.
And without being the curmudgeon, Andrew's word of the week, I note that Donald Trump was awarded the Republican nomination overnight and will be accepting that tomorrow, Thursday. So if you want some pessimistic news to end that Dornbusch download, we usually sort of end on a fairly upbeat note. President Trump is certainly not saying likely, but it's more likely now that he's been awarded the Republican nomination. So on that upbeat note, till next week.
Thank you.